What's up, guys? Welcome back. We're hunting down some big opportunities today that are hiding in plain sight. We're going to be talking about some dirt cheap, ridiculously undervalued stocks that the market's just sleeping on right now. We're not talking about meme coins. We're not talking about over AI hype stocks. We're talking about solid companies with real earnings, real cash flow, and stock prices that look like they're stuck in the 2020s. So number one on my list here is Sezzle. And Sezzle's a buy now, pay later stock. And basically what they do is imagine you're a shopper. When you go to check out at, a participating online store or physical location store, you can actually select Sezzle as a payment option. And Sezzle takes that purchase total and splits it into four interest-free payments over 6 weeks. The first payment is 25% and is charged immediately at purchase, and the remaining three payments are automatically charged every 2 weeks. There's no interest charge if you pay on time. And Sezzle performs, a very loose credit check. It doesn't affect your credit score for approval, and most everyone is approved instantly. If you take a look here at some profitability metrics I have laid out, free cash flow, gross profit, net income, you can see the company has actually started to, turn that corner and become profitable and maintain that profitability, which is what you want to see, right? So when you look at the first chart here and you look at the free cash flow from 2020 to 2025, those first 2020 through 2023, they were struggling for those years. Only had 1 year of positive free cash flow, but it looks like they've hit their stride here in 24 and 25, edging out 2024. And if you even look at their gross profit margins, I mean, they're looking really, really juicy. I mean, we're talking bringing gross profit margins from 10% to 60%. I mean, in my eyes, anything over 50%, well, is a thing of beauty here. And you can see their net profit margin, they were negative 65% all the way up now to just about 28%. So looking a little further and beyond the financial metrics, so to speak, and kind of looking at key performance indicators, two that I thought are pretty important for Sezzle here are their active users, and then how many of these active users are converted to their on-demand subscription service. So if you take a look at this, their growth in active users, it's been amazing, right? Looking back at 1Q 2023, they were losing about 15% of their active users, and then they've got it all the way up to the point where now they're seeing 12% growth in 1 quarter in active users. And then take a look to the next chart here with the on-demand subscription services conversion rate from their freemium version, and it's skyrocketing. I mean, they were at 5% in 1Q23. Now they're seeing 26% increases in 1 quarter of on-demand subscriptions, which is the best way for this company to anticipate increases in revenue. And if you take a look at Sezzle's next 12 months PE ratio here, you can see it's trading at a very attractive point for us to buy, right? It's trading right now at about 20 times for a rule of 40 software company that is really in the midst of tailwinds, right? With consumer discretionary spending being so low, I'd imagine a lot of the lower income is going to be turning to services like this and buying right now at a cheap valuation. It was trading over at 55 times earnings earlier this year. When you look at the context of the chart over the last, year and a half, it's only traded maybe at a 15 times. So I mean the floor set here, let's call it 15 times, and you know, I think there's a high ceiling for this stock. So the rule of 40, I just mentioned that in the last slide. Basically, that is when a company's revenue growth and then some form of profitability, like let's say EBITDA margin, add together and are over 40%. And it shows that a company's, it is very strong and sound, right? And when you look at all of the companies here plotted, There really isn't anything better right now than Sezzle. I mean, if you take a look, right, the goal of this graph is to be into the bottom right, because the lower you are along the y-axis is the lower EV to sales you have, and the farther along the right you are on the x-axis is, the higher EBITDA margin plus growth you have. So, you want to have really high growth and really high EBITDA margin, but you want to be trading at a low multiple, and that's a buying opportunity, which you can see this poorly drawn arrow here is Sezzle. One reason I feel like Sezzle's stock is low and mispriced right now is because they really don't have much Wall Street coverage. We can see if you look at some of the company's peers here, they all have about 8 to 15 analysts, some 6 to 15 analysts, while Sezzle only has 4. And I really think that's part of the reason the Sezzle stock is mispriced and undervalued is, retail investors, we have the chance to kind of front run this and hop in before the street gets in. I mean, it's a great company. It's just a matter of time before Wall Street realizes. And I mean, it's also interesting to take a look at the employees at this company, right? There's only 405 employees, and they're generating a market cap of 2.2 billion when the next smallest competitor is double the amount of employees and has less of a market cap. Their efficiency is S tier. And I ran a DCF here. I'm not going to go through the whole thing. I don't think people are too interested in when I nerd out about it. But basically, growing revenue here, you can see my top line growth 31, 23, eventually teeters down to 5%. They're getting to 2 billion in revenue in the terminal. I'm expecting EBITDA margins in the 35 to 40% range. I'm using a discount rate of 10%. Very light capex here, very light working capital, and that gives me a target share price here of $165, and the stock's trading at $51. I mean, this is by far the most attractive DCF I have ever put on my channel. All right, next up on my list is Pinterest. And I know this stock doesn't get a lot of love, but when you dig in and see the fundamentals and the daily active users and how they've expanded internationally, it's pretty impressive and, in my eyes, extremely undervalued. So let's hop right into it. And I think it's a really great time to buy the stock now. I mean, it trades at its lowest price to earnings ratio in the history of the company. And I mean, the graph I have here is only going back to 2022, but I mean, at one point it was trading at 40, 45 times earnings, and it has just been going down to the point where it's trading at 15 times earnings right now. Great entry point for us. If you take a look at the stock from 2020 to 2025, it's only grown so much, right? We're showing 159% growth over 5 years. But if you take a look at their cash from operations, I mean, this company has been performing excellently. I mean, they've increased their cash from operations 2,000 times, 3,000 times, 1,800%. I mean, these are absurd statistics, and to see that the market cap has only moved so little, I mean, this thing is mispriced. I mean, it's like Pinterest can't do anything right, even though they are executing. You take a look at their price to operating cash flow multiple, and that's the red line just continuously going down ever since 2021, just on a trip downward. But if you look at the global monthly active users, I mean, they're growing it by 6% a year. I mean, they started at 454 and now they're at 570 million. I mean, very impressive how they continue to grow their user base, but it seems like the stock gets no love. And, if you want, pause it, go through this. But the gist of the story here is that I'm growing it here at analyst expectations and industry reports combined with historical analysis and EBITDA margins. I'm looking at like 31 to 37% range with a 10% discount. Run that all through the model, and basically, I'm getting an equity value of 32 billion when you divide it by the total numbers of shares. Gives me a target price of $46, and the stock is currently trading at $26. So it gives us a nice 80% or so margin of safety on the stock. All right, next name and final name on the list here is New Bank. And if you haven't heard, basically, it's an online bank that has been taking Brazil by storm.